Hello traders, welcome to Nova channel. I'm here to break down the latest economic data and its impact on the markets, especially gold. In today's analysis, we will go over key indicators like GDP, PMI, consumer confidence, and the upcoming core PCE price index to assess inflation trends and how they might influence on gold prices. Let's dive in. The final GDP quarter over quarter for March 27 came in at 2.4%, slightly above the forecast of 2.3% and the previous figure of 2.3%. This indicates that the US economy is growing steadily but not overheating, which could ease inflationary pressures, as rapid economic growth often drives inflation higher. Regarding manufacturing and consumer-related indicators, the flash manufacturing PMI on March 24 dropped to 49.8, below the forecast of 51.9 and the previous reading of 52.7, signaling a contraction in the manufacturing sector. This could indicate an economic slowdown, which helps reduce inflationary pressures. Meanwhile, the flat service PMI on March 24 rose to 54.3, surpassing the forecast of 51.2, suggesting that the service sector remains strong. Since services account for a large portion of the U.S. economy, this could contribute to inflation. On the consumer confidence side, the CB Consumer Confidence Index on March 25 fell sharply to 92.9, below the forecast of 94.2 and the previous figure of 100.1, reflecting customers' concerns about economic prospects, which may lead to reduced spending and lower inflation pressures. For durable goods data, core durable goods orders month-over-month released on March 26 increased by 0.7%, exceeding the forecast of 0.2% and the previous 0.1%, indicating some positive signs in the business investment. However, this growth is not strong enough to create significant inflationary pressure. The overall durable goods orders month-over-month also increased by 0.9%, beating the forecast of minus 1.1%, but is still lower than the previous 3.2%, showing uneven growth. Other indicators, such as new home sales released on March 25, came in at 676K with no prior forecast available. The figure suggests that the house market is stable without signs of overheating, which could otherwise contribute to inflation. Meanwhile, unemployment claims released on March 27 were reported at 224K, in line with the expectation 225K and the previous reading the same number, indicating that the labor market remains relatively strong but not showing excessive tightening. Looking ahead to the core PCE price index month-over-month on March 28, which measures monthly charges in the price of goods and services, excluding food and energy. The forecast is 0.2%, the same as the previous reading. Inflation trends based on the current data suggest that the weaker manufacturing activity and declining consumer confidence could ease inflationary pressures. However, the strong service sector, which often contributes to inflation due to rising labor costs, presents on opposing forces. While core durable goods orders increased, the rise was not significant enough to create major inflation concerns. Based on these factors, the core PCE price index month-over-month is expected to range between 0.2% and 0.3%, with a slight bias toward the lower end. This projection is supported by the decline in manufacturing and consumer sentiment, while the services sector strength is not enough to push inflation beyond expectations. Even the Fed's annual core PCE target of around 2% or roughly 0.17% per month, inflation is likely to stay within this range without signs of a major spike. And how is it impact on gold? The core PCE index has a direct relationship with gold prices. If the core PCE comes in higher than expected, about 0.3%, increasing the likelihood of Fed tightening through the interest rate hikes. Higher rates strengthen the USD, putting downward pressure on gold, which could be bearish for gold. If the core PCE comes in lower than expected, below 0.3%, inflation concerns would ease, reducing pressure on the Fed to tighten policy, leading to a weaker USD and support gold prices. This could be the bullish for gold. If the core PCE matches the expectations, market reactions may be neutral, with gold prices being influenced by other factors, such as risk sentiment or geopolitical events. With the projected core PCE price index month-over-month expected to fall between 0.2% and 0.3%. If the actual data comes in at 0.2%, this could be possible for gold, as a weaker USD could boost gold prices. If the actual data is 0.3%, the impact could be neutral, and gold prices might remain stable unless other factors, such as President Trump's speech on March 27, trigger the market's reactions. And this is the final conclusion. The core PCE price index month over month on March 28 is expected to range between 0.2% and 0.3%, leaning toward the lower end due to weak inflationary pressures. If the actual reading is 0.2%, this could be bullish for gold, supporting higher gold prices. If the actual reading is 0.3%, the impact is likely to be neutral, gold prices remaining stable unless external factors influence market sentiment. This is today's analysis. If you found this helpful, don't forget to like and subscribe to Nova channel for more insights on trading and market trends. See you in the next update.